Good morning, traders. Welcome to another edition of Technical Talk. Today is the 13th of December and time is now 8:22 a.m. GMT. Now, as for Asia equity markets, we were mostly higher overnight, taking its lead from Friday's gains in US markets. The Nikkei 225 finished 0.7% in the green. South Korea's KOSPI dropped 0.3%, and the ASX 200 ended the day up by around 0.4%. Now, US equity index futures are also higher across the board right now, and European cash equity indexes are mostly higher. So we have the FTSE 100 at spot 10%. We have the DAX 40 at spot 4%, and the France's CAC 40 at spot 10%. In terms of the calendar, we have a thin session ahead with little seen to rock the boat in terms of scheduled events. Now, quickly moving to the charts, with the focus largely directed to major currency markets, we'll kick things off with the US dollar index. This is a geometrically averaged calculation of 6 currencies weighted against the US dollar, with the euro, yen, and pound being the largest components. As can be seen from the chart, now this is the daily time frame. The greenback has been in a clear trend since the end of May of this year, fashioned in a way in the form of a series of higher highs and higher lows. Now, in recent, with this trend, we can also see the RSI has support formed between the 40 and 50 area. Now, this is common within uptrending trending environments, and this is often labeled as a temporary oversold barrier, with the oversold still being set at 70 and above. But yeah, do take into account this this support between 40 and 50. As you can see, it's commonly seen within uptrends. Another key defining point of the dollar index right now is the potential pennant pattern. I say potential because we have yet to see two strikes of the lower ascending trend line. We have that on the higher, the upper boundary, but we don't have that on the lower boundary. Should we test this lower boundary and break out to the upside, this could be a potential continuation pattern with many traders likely taking the pole. This is likely from this area here to the top there, and then extending this value from the breakout point. As you can see, this is a considerable target and could see price jump above the quasi-mother resistance at 97.45. Now, on to the euro dollar. We're going to be focusing on the weekly time frame, the daily time frame, and the H1 time frame, really. So with the weekly time frame, as you can see, price since mid-November of this year has seen buyers and sellers squaring off around two key Fibonacci ratios, consisting of a 61.8% Fibonacci ratio at 1281 and a 1.618% Fibonacci expansion at 1237. Now, do note this 1.618% Fibonacci expansion also, according to many harmonic traders, is looked upon as an alternate AB equals CD pattern. So it's an extension to the AB equals CD formation. As you can see, price is showing some interest. Not really anything to get excited about at the moment. It's largely indecisive action. Should buyers eventually regain some consciousness here? Do keep an eye on this resistance area at 1473, 1583. Now, do bear in mind this is the weekly time frame, so this might not come about for quite a while yet. Should we break below here, then eyes will be on the quasi-mother support at 0778. Now, on to the weekly daily time frame here. We have quasi-mother support at 1213, which is also bolstering the weekly time frames Fibonacci level. So do keep an eye on this barrier. Should we rally from here, do keep an eye on the trend line resistance, and that's taken from, I believe, the high 22.54. And as you can see, if we do rally from here, this also intersects with the weekly resistance area on the weekly time frame. Now, just quickly on the H1 time frame, we have recently popped below the 113 handle on the H1 scale. Should we continue lower and test these lows around 12.69 and breach them, we could be looking at testing lows around the 12.35-ish range. I think that's a 12.27-ish range, excuse me. Now on to the Aussie dollar, again using the weekly, daily, and H1 timeframes. As you can see, buyers did eventually make a show from the prime support on the weekly time frame at 69.68, 72.42. This comes after a 1, 2, 3, 4, 5 consecutive weeks of a downside movement. This was a strong comeback, amounting to 2.5%. So we could see some follow-through bullish activity out of this area. Should buyers fail to find any sort of grip, we could be looking at the support area around 66.73 longer term. As you can see, this does also have some Fibonacci association. We have 100% Fibonacci projection at 67.80-ish. Now, do note the 100% Fibonacci projection also equates to an AB equals CD pattern. We also have a 200%, I believe that's a 200% BC Fibonacci extension at 66.87 within this area, and also, excuse me, and also a Fibonacci, a 61.8% Fibonacci retracement at 67.54. So we have a reasonably tight Fibonacci cluster around this area as well. Now onto the daily time frame. As you can see, we have come off support at 70.21 in recent trading, which was also supported by a 38.2% Fibonacci. Let me just zoom out so you can see the 38.2% Fibonacci retracement at 70.57. Now, as you can see, we are basing just below the Quasimodo support term resistance. Now, should we test this area, I will be expecting some form of reaction from this zone because these are very high probability support and resistances. Whether it's enough to contain the pressure coming out of the prime support on the weekly time frame is difficult to estimate at this point. Should we break above here, then do expect a continuation to the upside. Now on to the H1 time frame. I'll just zoom out. We have price recently tested the prime resistance at 71.90, 71.79, and as you can see, it's serving well as a resistance. Now, do note, we did have some traders saying we have bearish divergence at this point. That's not entirely true, I don't believe. It's pretty close, but with the RSI, it's calculated with closing values. So you always take the closing prices, not the extremes when you're looking for divergence. So as you can see, we don't really have any form of divergence at this point. It's a shame because it lines up perfectly with the prime resistance on the H1 time frame. Finally moving over to the pound dollar. As you can see, we have a double top pattern around the 42, 41-ish region formed. This was formed starting at the end of February of this year. As you can see, we did break below the neckline in August, and we have continued lower below this supply turn demand area at 36.29, 34.56. Now, the take profit target for the double top pattern comes in around 131. So do be aware this could be a target longer term technical sellers have their eye on. Now, onto the daily time frame, we do have Quasimodo support lurking just below at 31.19, which lines up pretty much with the higher time frame target, the weekly time frames, double top take profit target. So do keep an eye on this Quasimodo support at 31.19 as a potential downside objective. Now, with that, so that's it from my side this morning. As usual, any questions or comments, email the research team at marketsanalyst@fpmarkets.com. With that, have a wonderful day, and I'll be back again on Friday. Thank you so much.